Hello, and welcome to this video on preparing sole trader financial statements. So look at an example now. So the following trial balance has been extracted by the bookkeeper of Jennifer West at the 30th of June 2023. So the bookkeeper is the person that maintains the accounting records for the business. So it's got three columns here: the account name, the debit column, and the credit column. And the debit column is assets, expenses, and drawings, and the credit column is liabilities, income, and capital. So all various account names and given all of the actual amounts for each account name. Now we'll be going through these in a few moments. Now what we've got to do is trial balance. We've given some extra notes at the bottom about the 30th of June 2023. Now these amounts are not included in the trial balance. So you must remember that these are not included in the trial balance. So we're told that the 30th of June inventory is valued at 77,942. So that's going to be our closing inventory. So let's just make a note of that. That's going to be our closing inventory. Vehicle expenses owing are 1,750. Now, if they're owing, that's an accrual of expenses. So accrual of expenses. Office expense or prepaid. That's going to be prepayment of expenses. Commission income owing of £250. That's going to be accrual of income. So that's accrual of income. So these are bringing together lots of the things we've done in the past now. Rent income prepaid, that's prepayments of income. And goods costing £350 were taken by Jennifer West for her own use. Now they're going to be classified as drawings. So all those will come to as we work our way through the question. Now what have we got to do then? So it's required. You are to prepare the income statement of Jennifer West for the year ended the 30th of June 2023, together with her statement of financial position at that date. So here I've got a template now for an income statement for a sole trader, and also an income statement for a statement of financial position for a sole trader as well. Right, so what we're going to do is we're going to look through the template. I'm going to see if there's anything relating to that in the actual question information. So revenue. So I'm looking for revenue now. Go back to my trial balance. And revenue at the top is 914,580. Now what I'm going to do, each figure we use, I'm going to highlight it so we know we've used it. Now if you're doing this on paper, so go to the adjusted ticket, so it's a bit quicker. So revenue, we've done that. Less sales returns. So do we have any sales returns in this question? So we've got any sales returns. Here we go, sales returns 3845. So I'm going to highlight my 3845. So I know I've used that figure now. Now I'm going to get our net revenue. That's your revenue less your sales returns. And that's going to give us £910,735. That's our net revenue. Now I'm going to look at cost of sales with the opening inventory. So the opening inventory is the inventory in your trial balance at the 1st of July 2022. So let's see if we can find that. Here we go. Inventory at the 1st of July 2022 is £74,284. So that's our opening inventory. Now purchases, now just remember in purchases, we've got goods costing £350 were taken by Jennifer West for her own use. So they're going to be classified as drawings. So they've got to be deducted from the purchases figure. So we go to the trial balance, look for purchases figure now. And it's 640,378. So I'm put a little calculation in brackets now. So 640,378. But I've got to take away the amount that she took for her own personal use for drawings. That's going to be £350. Because it's only a small working out, I can put it in brackets next to the category. So that's going to be £640,378. Take away £350, which gives us £640,028. Now, carriage in. Now, you go through the trial balance. There's no carriage in this question. So for the moment, I'm just going to put 0 in there so you can follow the actual template. Purchase returns. Now the word purchase returns here they go, £4,197. So what net purchases now is going to be the purchases plus carriage in, take away purchase returns. So that will then give us £635,831. So now, as you'll remember from before on the income statement, you add together the opening inventory and your net purchases. So it's the 74284 plus the net purchases of 635,831. Just let me check that. So it's 74284 plus the here we go. Right, let's just check that. 635,831. So turn it together is going to be, it's not doing this right, this isn't. Here we go. Plus 74284, 710,115, which is what I originally had in the first place. Right, now let's close the inventory up. Purchase returns. Did I highlight that? Let's check. No, I did. So let's highlight our purchase returns. Now let's close an inventory. Now that, if I remember correctly, was in the notes. So closing the inventory is 77,942. So take away 77,942. Now the closing inventory also goes on your statement of financial position. So let's go down to the statement of financial position. My closing inventory is going to be, it was 77,942. So now I've dealt with the closing inventory, so I can highlight that or tick that figure off. There we go. Now, 710,115, which is the opening inventory plus net purchases. We take away the closing inventory, we will then get the cost of sales. So it's the cost of goods that have actually been sold. And it comes to 632,173. Now the gross profit is your net revenue, take away your cost of sales. So it's going to be the 910,735, take away the 632,173, giving us a gross profit of £278,562. And now we're going to add any other income. So discount received. So discount received, we go to our trial balance, looking for discount received. Here we go, discount received 5168. So let me go back and highlight the 5168 so I know that I've used that figure. Then I've got rent income. Now you remember on the rent income in the notes to the accounts, rent income was prepaid by £300. We're going to do a little calculation of brackets now. So the rent income is here. It's 3,750. So you can put 3,750 in brackets. And takeaway was prepaid, so it's paid in advance. So it relates to the following year, £300. Now I can mention that in one moment. If it's paid in advance at £300, it's prepayment of income, and that goes in a statement of financial position. So prepayment of income. Here we go. And it's £300. So I've done with that £300 now, so I can highlight that. Okay. So the rental income then is going to equal 3,750, take away the £300, give us £3,450. Commission income, again, it says commission income was owing, so we were due another £250. So I need to find my commission income figure, which is 1752. Put it in the brackets, it's a small calculation. So 1752. Then plus, because it was owing to us, £250. Now it was owing to us, that's accrual of income, and that goes in our statement of financial position, £250. So I can highlight the £250 now. So back to my little calculation now. So commission income is going to be 1752 plus 250 to give us £2,002. Recovery of irrecoverable debts and reduction of written-out debts. There are none of those in this question. So just to keep in line with the template, I'm going to put in zeros for them. So now we need to add the gross profit plus all of our other income. So that's going to give us a total of £289,182. Now expenses now. I'm going to type expenses. Now discount allowed. Let's check if there's a discount allowed. There we go. 4287. Now I didn't highlight the 1752. So I'll do it at the same time. So 1752 and 4287. So that's the 1752. And that's the 4287. So we're up to date in the highlighting bit now. Salaries. Right, were there any salaries in this question? Yes, there's salaries there of 148.72. There's nothing in there about salaries. So it's going to be £140,872. So let me highlight that 140,872 because we've used that figure now. Electricity and gas. Is there anything about electricity or gas in this question? Okay, I've got nothing about electricity or gas. So for the moment, I'm just going to put 0 in now. Anything about rent or rates. This is the payment of rent, not rental income. This is the payment of rent. And there's nothing about payment of rent. So that's 0 as well. Carriage outwards. Just checking out. Make sure there's no carriage outwards. So carriage outwards. I've got no carriage outwards. So that's going to be 0. Vehicle expenses. All right, vehicle expenses. We've got something here. Vehicle expenses were owing 1750. We've got to add that on. So our vehicle expenses, we've got 39579. I'll put it in brackets for my little calculation. So it's 39579 plus the amount owing for vehicle expenses, which was 1750. Now, whilst we're starting at 1750, that was amount owing, so it's the accrual of expenses. So 1750 goes in accrual of expenses in statement of financial position. So it's 1750. So I can highlight my 1750 because that's now been dealt with. I can now work out the vehicle expenses. So it's 39579 plus 1750. Give us 41,329. Sundry expenses. I've got no sundry expenses, but I need to highlight the 39579. So no sundry expenses. So that's going to be 0. We've got no irrecoverable debts. No provision for doubtful debts in this question. No depreciation in this question. But office expenses. I've added that to the bottom of my list of expenses now. So office expenses. They were prepaid by 841, so because they deduct that from the amount. So office expenses. Got 35468. So 35468. So 35468. Then I think there's a prepayment. There you go. So we've got to take away 841. So let's take away its prepayment of expenses. So that also goes in our statement of financial position. So 841 is prepayment of expenses. So we dealt with the 841 now. So I can highlight that. And then that looks like we're going to have 35468 take away 841 to give us 34,627. So let's just go back now and see if there's anything we haven't ticked which we should have done or highlighted. Office expenses we've just done. I've got purchased here. Now just check, we did purchase 640,378. That's that figure there, so that should be ticked, so highlighted. Was there anything else that goes in the income statement? Our rent income. We dealt with that. That was our rental income, 3,750 there, so that should be highlighted. So the next one is trade receivables, trade payables. Inventory at the 1st of July, 74284. And that's our closing inventory. So that's our opening inventory. So that one's been done. So that should be highlighted. Vehicles, office equipment, property, bank loan, bank capital drawings. So we've now done everything that goes in our income statement. So now what we need to do is we want to add together all of our expenses. So it's all of the expenses, the amounts in this column. Comes to 221,115. Now the profit for the year is going to be your gross profit plus the other income of 289,182. Take away your total expenses. So it's going to be 289,182. Take away 221,115. Gives a profit a year of £68,067. Well, let's go down now to the non-current assets now. And the non-current assets, we've got vehicles, office equipment, and property. So I've changed these now to match what's in the question. Now, what you got in the question, if you go back to the question now, you've got vehicles. All it says is 93,700. It doesn't say cost, it doesn't say depreciation. If that's the case, then that's going to be your carrying amount or your net book value. So for our vehicles, we're going to have the carrying amount and net book value 93,700. So I can highlight that figure that's now being used. For office equipment, again, there's no cost to depreciate. It just gives us one figure, so that's the carrying amount and net book value. So office equipment is going to be 27,850. And the property figure is going to be the £125,000. So let me just highlight those two figures I've just used. So it's those two there. So now we can total our carrying amounts for net book value for non-current assets, and it gives us £246,550. Right, current assets now. Closing inventory, we've already done. Right, trade receivables. So that's in our trial balance somewhere. So trade receivables in my trial balance. Here we go, it's 95,187. So let me highlight the 95,187 because I've used that number now. So you could also, if you do it on paper, you can tick it. Provision for doubtful debts. There is no provision for doubtful debts in this question. The closing inventory, just to check, that should be in your middle column now. And then you've got trade receivables, listed provision for doubtful debts. There's going to be 95,187. Take away in this question 0, so it becomes 95,187. Bank and cash. So do we have any money in the bank accounts? Let's go back to a trial balance. Here we go, 2579. So that's our bank and cash figure. Let's highlight that figure so we've now showed that we've used it. So now we total up our current assets. And it comes to £176,799. Now, current liabilities, bank overdraft. We don't have any bank overdraft question because we've got money in the bank. So debit balance. Trade payables. I remember seeing them somewhere. So trade payables. Trade payables, 73,582. So we just highlight that figure, 73,582. Back to our statement and position. So now we want to add together our current liabilities. They come to £75,632. Now to get your net current assets, it's your current assets take away your current liabilities. So it's going to be 176,799, take away 75632. That gives us £101,167. Now we add that figure to our non-current assets figure. That's giving you £347,770. Now, if there were no non-current liabilities, for example, any long-term loans, that would be the net assets. But in this question, we've got a long-term loan. So let's see what it actually is. I've got a bank loan repayable in 2029. Now, 2029 is 6 years after this. That's why it's a non-current liability. Current liability are paid in 1 year, within 1 year of the end of the year ends date. So I've got a loan there. So let me just change that to bank loan to be specific for this question. So we've got bank loan. And the amount, if I remember correctly, was £85,000. That's it. There you go, £85,000. So let me highlight the £85,000 to show that we've used that figure. So now the net assets now is the 347,717 minus the 85,000, giving us £262,717. Now the bottom section has the finance by section. It's got a capital. The opening capital. Now the opening capital is the amount in the trial balance. So the opening capital, if I go back to the trial balance, was £225,000. Capital introduced. There was no capital introduced in this question. It's going to put 0. So now the two of those added together gives us £225,000. Now it says add profit for the year. The profit for the year is the profit from our income statement. So back to the income statement. The profit for the year was £68,067. So if I add those two together now, I get £293,067. Now drawings, if you remember, we half used this £350 before when we deducted it from the purchases. Second for Jennifer for her own use. So we could have added on to the drawings. So let's see the original drawings figure. The original drawings figure was £30,000. We're going to add on the £350. So that's £30,350. So to get the final figure is £293,067. Take away the drawings of £30,350 and we get £262,717. Now, this is when it's handy now that we can check if this looks correct or not. Your net assets should be the same as your final capital figure. Now, in our case, the £262,717 net assets is the same as our final capital figure of £262,717. So that suggests to us that the correct question is correct. It's not guaranteed it's correct, but we know it's got a good chance of it being correct. Now, one other thing I want to mention in this, now you'll notice because we didn't have any cost of accumulated depreciation, I didn't include that in my standard position. And in all of these other entries, wherever we got a 0, like for example, carriage in, so I carriage in there, my irrecoverable debts, provision for doubtful debts, all of these expenses, electricity and gas, rent and rates, and carriage outwards, sundry expenses, irrecoverable debts, provision for doubtful debts, depreciation of motor vehicles and office equipment. If there are no amounts for them, you do not need to include those lines. You only want to include the lines that have got figures for them. So if there's got no figure for them, you don't need to include it. For example, here again, I've got bank overdraft, you don't need to include that. If you've got provision for doubtful debts and it's 0, you don't need to include it, but then you can put the £95,187 in the middle column, just like the other current assets. So there you go. That's the sole trader financial statements involving income statement and statement of financial position. So thank you very much for watching the video, and I hope that you found it useful. Thank you.